Gold's price rally has reflected sentiment on monetary policy, but what can base metals tell us about the sentiment on the economy? Joining me today is Ed Egilinsky. He's the head of alternative investments at Direxion. Welcome back to the show, Ed. Good to see you.
Yeah, great to be back.
What a summer so far.
Yeah, been a wild one.
Yeah, well, at least talking gold. So let's start before we dig into the nitty-gritty and get your sense of where we are at overall right now. We have gold up, equities on a tear, bonds up, crypto's up, everything's just great, or is it not the case?
Well, it's been whatever you've been in this year has basically been up in varying degrees, so it's been great from an investor standpoint. But I think the bond market is a leading indicator, and it's telling you that there could be rougher times ahead for the equity markets as we move forward throughout the year. Certainly negative yields globally, as well as the dovish stance by the Fed, leads you to believe that there could be some downside coming in the equity markets. And certainly the global economic data that we're seeing, particularly in China, as well as in developed Europe, would lead you to believe that the economy is softening pretty significantly.
Well, and that's translated well for gold so far, but where does it go from here?
Well, I think gold right now, you have the Fed remaining dovish. People still want that flight to safety trade. And as I mentioned before, with negative yields right now globally, and the US yields seem to be dropping as well, that flight to safety trade is more attractive now for gold than it has been over the last couple of years. From a technical standpoint, if gold can hold 1,400 here and break out above the 1,440 level, I think you can see higher prices this summer.
What do you make of the counter argument to that? That would be, well, cryptos, especially Bitcoin, have replaced gold as that safe haven play. And I'm not saying that I'm on that camp or suggesting that's the case, but that's the counter argument.
When you look at the crypto space in general, I think the volatility there and the fact that really it's not a tangible asset to me like gold is. You have a lot of things that are priced in dollars, or in some cases look to gold as well. So I don't think you're there yet with Bitcoin. I don't want to pass on the merits of it, but certainly the volatility there, it's much more of a riskier play to me. There's volatility in commodities, but gold is a known entity.
You mentioned China before, so you're watching copper prices carefully here. What direction do you think will continue here? Well,
it's a critical stage for copper right now. You're talking about really, it needs to hold the 260s in terms of support. We're right now at around 270. So from a technical standpoint, for copper to break out, I think you need to see $3 or above again. Some of the things that make you believe that probably that won't be the case, at least short term, is the China economic data. As well as the fact that the trade war probably is not going to be resolved anytime soon. I think Trump just tweeted again that they're far off in terms of those negotiations.
Even Steve Bannon came out saying this is something that could take years before we see a resolution from this, from the trade war talks.
Well, I think what's the vested interest right now of China to reach a deal with Trump because the election's coming up towards the end of next year. So they're going to wait it out. And Trump, how much more tariffs is he going to impose on China, which could hurt our economy as well? So they both, right now, walk a fine line.
So Ed, overall, if I asked you to sum up, your feelings on the economy, do you feel good with where we're at right now?
Well, I think some of the economic indicators, like we discussed, copper, where yields are right now, gold rallying, would make you believe that a lot of people are in a defensive mode right now. But really, you have to continue to look from the commodity standpoint, supply and demand. And right now, in certain areas, you're seeing the demand waning. There are some areas right now, if the dollar continues to weaken as a result of the Fed cutting rates, that could be a tailwind for some commodities, most notably precious metals. And you have macro events like what's going on with the flooding in the Midwest right now that could propel agricultural prices.
Finally, do you track silver at all? Gold-silver ratio here?
Everybody
levels,
talks about it.
Unseen, right?
Yeah, we're in the 90s still. Historically, they've been in the mid-60s. What does that say? If gold stayed right where it is right now, silver's probably due for a 30 to 40% upside move from here.
And what's surprising is that longtime gold bulls and bugs that I've interviewed for over 10 years, Jim Rogers, Robert Kiyosaki, actually telling me that if they had to buy one right now, they'd be buying silver.
Well, I think on a relative basis, for sure, based on that price ratio. I do believe, though, that the precious metals, especially if we have a softening of the economy or continued softening of the economy second half of the year, will be the place to be. The one thing with silver, though, you have to keep in mind, about 50% of its usage is industrial. So if you get a slowdown there, silver might lag a little bit. But overall, I think on a relative basis, silver might be the place to be. We have a commodity strategy right now that's based purely on price trends. We could be long up to 12 commodities. Right now, we're only long 4 based on price trends, and that's gold, that is gasoline, which has had a great year so far, and the other 2 are the ags just recently with wheat and corn.
Right. Well, Ed Egilinsky, thank you so much for coming by the studio. Thanks so much on this very hot summer day.
Have a good summer.
Thanks for coming by, and thank you for watching. We'll have more for you tomorrow.